Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 30th, 2024, and we're diving into the third quarter earnings report of Illinois Tool Works, a global leader in multi-industrial manufacturing. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Illinois Tool Works, or ITW, has just released their Q3 2024 results, and there's a lot to unpack, from revenue figures to strategic initiatives and future guidance.
Revenue and profitability overview. Let's start with the top line. ITW reported a revenue of $4.0 billion for the third quarter, which is a slight decrease of 2% compared to last year. John, can you elaborate on this?
Absolutely. The revenue decline is primarily due to a 1% drop in organic growth and a 0.4% negative impact from foreign currency translation. However, it's important to note that despite the revenue dip, ITW maintained a strong operating margin of 26.5%, thanks to their enterprise initiatives, which contributed 130 basis points.
And what about their earnings per share?
ITW's GAAP EPS was $3.91, which includes a significant divestiture gain. Excluding this gain, the EPS stands at $2.65, marking a 4% increase from the previous year. This indicates solid profitability improvements despite the revenue challenges.
Operational efficiencies and future outlook. ITW's operational efficiencies seem to be a key highlight. Can you tell us more about their enterprise initiatives?
Indeed, ITW's enterprise initiatives have been pivotal, contributing 130 basis points to their operating margin. This reflects their ability to optimize operations and manage costs effectively. Looking ahead, they've raised their full-year GAAP EPS guidance to a range of $11.63 to $11.73, which is quite promising.
What about their cash flow and capital allocation strategies?
ITW generated a free cash flow of $783 million this quarter, with a conversion rate of 102% to adjusted net income. They also repurchased $375 million worth of shares and increased their dividend by 7% to an annualized $6 per share, demonstrating a strong commitment to returning value to shareholders.
Strategic initiatives and market positioning. ITW's strategic moves, such as the Wilsonart divestiture, seem to be paying off. Can you provide more details?
Yes, the divestiture of their equity interest in Wilsonart brought in $395 million, resulting in a pre-tax gain of $363 million. This move aligns with their strategy to streamline operations and focus on core segments. Notably, 6 out of their 7 operating segments saw margin improvements, underscoring their strong market positioning.
And how does their tax strategy play into this?
The effective tax rate for the quarter was 14.9%, benefiting from a discrete tax gain related to the Wilsonart sale. This favorable tax position further supports their profitability and cash flow generation.
Key takeaways. In summary, ITW has demonstrated resilience in the face of market challenges, with strong operational execution and strategic divestitures. Their raised EPS guidance and robust cash flow highlight a positive outlook. John, any final thoughts on ITW's investment prospects?
ITW's focus on operational excellence and strategic capital allocation positions them well for future growth. Their commitment to shareholder returns through dividends and share buybacks makes them an attractive option for investors seeking stability and growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ITW's performance in the comments below.